I'm assuming we're live. Shout out to Jerry. I say this often, but if you have music you want submitted that is your own to be played on the call, we'll play it, and in time we'll learn every word.
Even if you don't want it on the call, if you submit it, it will end up on the call.
Yeah.
So just know that as well.
If someone wants to prank you, they can submit your music as well. We'll take any submissions. But shout out to Jerry, loyal listener, great client, good friend. Always excited to have his tunes on.
Songbird of a generation.
Yeah, a lot of people are saying. Welcome to the morning market call. It is Thursday, October 6th, 2022. How's everybody doing?
It's Thursday.
Oh, yeah. Resounding recognition of the date. Glad to be here. Interesting day in the markets as we tee up for today. Dow futures, S&P futures, and NASDAQ futures all down 25 to 30 basis points, so not down a whole lot. Oil down just a smidge, gold up a little bit. Wild day in the market yesterday, Ben. Pretty decent rally to be anywhere close to flat, I thought.
Yeah, I mean, we were down close to 2% at one point yesterday because we had better than expected data. We had the ISM manufacturing data on Monday, and that was a little bit worse than expected, and it was showing a decline. And I think that a lot of people took that as hope that there was going to be a Fed pivot, and we talked about that on the call. Well, the ISM services portion of the report came out yesterday, and the services, as we all know, is a larger portion of the U.S. economy. It's about 65% of the economy. And that was stronger than expected. We did see a little bit of deceleration, but it wasn't all that much. It went down to 56.7 from 56.9, which is really just a rounding error. Employment actually ticked up to 53 from 50.2. So a significant uptick there. And then prices are still at 68.7, which means that prices are still increasing fairly rapidly. So this is not what the Fed wants to see. It further cements the fact that to the extent that we are cresting a wave of inflation, it's going to be a long burn on the wave while we're high. And some of the commentary that we had was that the chip shortage shows no sign of abating. That was from retail, and that inventory levels are starting to fall from record highs. And I think that's encouraging from the economic perspective, but it's negative from a standpoint of you're not going to see as many markdowns. When inventory was high, we were seeing all these markdowns. Nike was talking about markdowns. Target was marking down things substantially. But if we start to pull back on the markdowns, then you start to see a reverberation in inflation as well. So I think it further cements that the Fed has more work to do. And it correspondingly worked out into a market drop yesterday. So for the market to rally back after that, and part of it was driven by energy, but for the market to rally back, I thought that was a significant show of strength to the market, and it shows that we were probably quite oversold coming into the week, and it's nice to see a little bit of a bounce.
And it feels a little bit like we're getting, I don't know if this is the second or the third wave. I'd have to almost go back and just look at charts for the S&P or the Dow or any index. But it seems like we're kind of getting these shorter run cycles where the market really aggressively sells off. It then shows a little bit of strength. I'm interested to see if we get some degree of overbuying the opposite way over the coming weeks, and then if we just redo this over and over, because it seems like we're kind of getting this cycle where, a relatively decent move downward, some surprising days in which the market shows strength, then a couple of days of strength in a row, and then a surprising decline again. So I'm interested to see if that cycle repeats itself. It does not necessarily, look like it's lockstep with that. I mean, we were down yesterday, but I think, as Ben pointed out, the resiliency there was pretty noteworthy. The fact that there are people feeling like, hey, we're a little bit oversold here, we need to step in. And honestly, to see that happen after two really strong days, Monday and Tuesday, was arguably more encouraging. It wasn't in isolation. It wasn't like we traded down significantly to start the week. So to see a little bit of a rally there was positive. You mentioned energy. OPEC has decided that they're going to cut production by 2 million barrels per day. The White House not happy. Joe Biden and others very upset about this. They've obviously, the Biden administration is apparently pro more oil. They want to drill more, I guess. But they just want everyone else to do it.
In Venezuela.
Yeah. So not happy about that. The White House has said that they're going to release 10 million barrels of oil from the strategic reserves in November. That may seem like a lot, but that's a much slower pace than what we've been at. Ben and Tom, how would you guys kind of digest this as you're looking at oil supply relative to demand and kind of the policy tied there too?
Yeah, the incremental news that we got during the day yesterday was the SPR release in November. And I think that initially on first blush, that's positive if you want lower oil. But the problem is there was always going to be, after OPEC did this, there was going to be a response from the Biden administration. I thought there was actually a chance that they might just continue at the pace that they were going. So to now say we're doing 10 million of barrels in November versus what would have been a 30 million barrels at the current pace, I think that just further takes more supply off the market. And I think that now that he's said that they're going to do 10, it's tougher now to go do 30 because he's kind of said, okay, this is my response. I think that oil prices are going to go higher. The OPEC Plus controls over half the world's oil supply. So I think that they do have the power to potentially move oil prices, maybe not to 120 like they were, but probably back to $100 a barrel.
Yeah, I would agree. I think that, they've done a good job at artificially keeping them down through, tax cuts, temporary releases, all these different things. But I just think that the writing's on the wall. The Saudis can really turn the screws on us now, and they're choosing to do so. Is it because they want to help Russia because higher oil prices help Russia? Is it because they just want to put the pressure on the U.S.? The motives are tough to discern, and I'm sure depending on which side of the aisle you're looking at, you'll have different reasons for why they would want to do that. But at the end of the day, they've got the option to do it, and they're doing it, and they can make more money in doing so. So,
well,
I mean,
and to me, I keep seeing these articles about, well, OPEC's really helping Russia with this. I'm like, yeah, Russia is in OPEC Plus.
yeah, exactly. They're on the same team. Yeah, exactly. Yeah. So it's not exactly known as like a group of countries that are either well run or rational, or known for their good
high
deeds.
moral ethics.
Yeah. So
yeah, I don't find it surprising at all. I mean, the crazy thing about oil, it's been such a wild year for it, especially with the conflict between Russia and Ukraine and just everything going on from the inflation narrative. We've seen some pretty big moves in oil pricing. I mean, over the last 10 days, oil's up 13% in pricing. And in a weird way, it almost seems like an afterthought. There's just so many other things going on. But it's such a huge part of the economy. I do think that may be at least partially a reason to attribute the rally yesterday. So something to continue to keep an eye on. I mean, I think there's going to continue to be volatility. And my general expectation is the prices are going up. I think we probably are all in agreement on that. There's no change in demand and supply is running lower even with the reserve releases. Ford is continuing to raise prices on the F-150 Lightning, saying more or less that inflation is a big problem. Surprise there. And originally it was supposed to be $40,000, and they raised it to $47,000. Now it's at $52,000. I'm not shocked by that. I also think those numbers are kind of that's funny money numbers. Good luck finding one for $52,000.
When they first announced the $40,000 pickup F-150 Lightning, I thought it was almost unbelievable how relatively low it was priced. So $50,000 seems a little bit more in keeping with where prices are going. What I think is interesting is they cite three things. They say supply chain problems, rising material costs, and market factors. And I think market factors here is just a proxy for demand, and we can charge more, so we're going to charge more.
Yeah.
And I think that, supply chain, material costs, but material costs have actually come down a little bit. I think basically they're saying we can make more money, we're going to make more money.
And I mean, and the thing is, like, what does a base model Lightning look like? Because, like, in my mind, a base model F-150 that costs whatever the lowest MSRP for a F-150 has hand cranked windows. It's probably a manual. It may or may not have air conditioning. But in the electric vehicle space, what does the base model look like? I'm assuming it doesn't have windows that crank. It's probably going to be more expensive, and there probably isn't a base model.
Yeah.
Right. You're going to have it's either, if you're buying an electric vehicle, you're probably buying a very high level, not right off the line car. So that's an illusion. That number, I think, 52,000. There are
Yeah,
no trucks like that.
No, I mean, I think if you go to a car lot right now, good luck finding anything close to the baseline MSRP on any vehicle.
Yeah.
Right now. I mean, dealers have been pretty vocal, and even some that we talk with on ongoing basis have been pretty vocal about, hey, the challenge we're facing is inventory without question. And yet we're moving as many units as we have in the past, and we're moving at them typically at a higher price.
Yeah.
We're not having to do, the classic negotiation at the table. We're not having to do any kind of rebates or discounts or promotional pricing. If we have a car, it may not be exactly what you want, but if you need one, come get it. Here's the price.
Yeah.
Which puts you in a tough spot if you have to buy a new vehicle right now, certainly. But yeah, I think it's funny money when you think, hey, I can go buy an electric F-150 for $50,000. Let me know if you find one. I mean, maybe we'll buy it. We'll all split it up. We can, carpool to work and really save the environment. One podcast at a time. Peloton, another pretty tough memo from Barry McCarthy. They are going to lay off 500 people. He did offer his deepest gratitude to those who were impacted by today's action. So all in all, like, pretty nice. This company is just, I don't know how they get out of this, but just a wild note. I mean, the notes are almost a parody of themselves at this point.
He always finishes with this quote: "Me to you, you to me, you to each other, and all of us to our members."
The weirdest. I mean, he basically put out like a pep talk to the people who he fired, as if he personally was being put in a tough spot. Like he had gotten fired. I mean, he said resilience is a conscious choice. It's like, I mean, I guess if you get fired, like you don't really make a choice there and be resilient or not. Like, you just got fired. It's a very odd thing to say.
He's getting a ton of credit. He's
firing people. Yeah.
He's getting a ton of credit for this. I was just listening to CNBC, and they said, man, he's just, he tells it like it is. I'm like, he's running this company that was in a bad shape already into the ground. Like McCarthy himself says we might not be around in 6 months.
Yeah.
But he's very self-congratulatory, and he's very high fluff, low execution so far. So I do look forward to each of his memos, though, because they're so bizarre.
They're very odd. Another quote: "Sooner or later, we all get knocked down in life, but we all deal with setbacks in our own way." I mean, kind of lost in that is, hey, I'm the one actually knocking you down.
Yeah. Yeah. He doesn't make mention of the fact that he made that choice.
So Peloton, I don't know. It's a mess. Costco, solid sales numbers, at least at a high level. Ben, what are your takeaways?
Well, this is a company that is run well, and this is a company that we own. They continue to put the customer first, making smart decisions, and I think that they've engendered significant loyalty among their customer base. They had more traffic gains again in their most recent month. I think they may have been helped out a little bit by the hurricane, as people went to Costco to stock up before the hurricane, but actually their strongest regions were in the Midwest, the Northwest, and San Diego. So overall, I'm very pleased with the numbers that Costco put up over the last month. And what's interesting is that they actually saw a pickup in that middle of the store items, the apparel, the home furnishings, seasonal goods, etc. So I view that as a positive for Costco specifically in their margin. And you could also be seeing the same shift that we saw at Walmart, where a more affluent consumer is now trying to find the deals, and therefore now shopping increasingly at places like Costco and Walmart, which is going to be accretive to those companies' margins.
Yeah. So flowing away from, say, Nike, who's obviously shown real weakness in their apparel, suddenly Costco is showing strength there. That might be the flow. People are flowing away from name brand stuff and into the Costco option.
We do get tomorrow. We'll get a good, by good, I mean a meaningful, potentially, employment report. We did see a jump today in initial unemployment, highest number we've seen since June. So initial jobless claims came in at 219,000. So jump of about 30,000. Sizable number. We've talked on that data point more about just kind of the trend line. So notable to see if that trend continues and if it is an indication of additional layoffs. But tomorrow, we're going to get the more meaningful jobs number. What's everybody looking for?
I mean, I really hope we see. I mean, not to be like Barry McCarthy at Peloton, but I really hope we see a number that shows that we're moving towards higher
You
unemployment.
want a lot of people getting
Yeah.
knocked down.
Otherwise, we're just going to get stuck in this hike cycle perpetually. I mean, I think my expectation is that the jobs number is going to be stronger than anticipated, and the market is not going to react well, particularly the front end of the bond market. But I'm hoping that we'll finally start to see a crack of some kind, and I think that would lend itself to positivity kind of across the board.
Yeah, I would agree with you. I think that the manufacturing employment ISM that we got on Monday would be supportive of a little bit lower jobs, but the services employment number that we got yesterday would be supportive of higher jobs. So I don't know really where it will fit down, but ultimately the Fed wants to see higher unemployment, and they're not going to stop until they do.
Yeah, the consensus expectation is really for, frankly, no meaningful change on the employment picture, expecting unemployment rate to stay steady at 3.7%, which was the last reading. Participation rate expected to be at 62.4, exactly in line with the last reading. Average hourly earnings expectation is for 5%. Previous reading was 5.2% on a year-over-year change. If I had to bet on one number to potentially be off, that's probably the one that seems most likely to me anyway.
And if that was high, if the average hourly earnings came in high, I think that could be really negative for markets.
Yeah. I just have a hard time thinking that in the most recent period, wages have increased at a slower rate. We'll see. We'll report on that tomorrow. We'll have that data as it comes in. Hope you guys have a great rest of the day, and we'll talk to you soon.